Good evening and welcome to this session of the virtual coaching classes organized by the Board of Studies of the Institute of Chartered Accountants of India. My name is Srikanth. I will be the faculty for some of the topics that you will be studying. I see a lot of students here who have already started and who have already put in good evening messages and all. Nice to know. Today is possibly the first class which you are attending on this topic, which is Corporate and Other Laws, Paper 2, Corporate and Other Laws of the Intermediate Level. It's really a pleasure to be here, and I'm sure you will have a more deeper introduction later from the excellent faculty we have at the Board of Studies. Today, we are going to jump into the topic. We are going to get into the subject, and we are going to start with the topic called preliminary, right? Which is basically the first chapter of the Companies Act 2013. Now, I will go as slow as possible and I will try to make things as clear as possible. But if you have any doubts, you can sort of ask it in the query pad, right? So I have Jyotija. Ms. Jyotija, we have started the class. Why don't you just confirm that you are now able to hear me? Just one message out there saying, you are able to hear me and you are able to see me and you are able to see the screen, whatever, just to confirm that I'm on the right track. Okay. So this topic is called preliminary. Preliminary means beginning, starting. So the first chapter of the Companies Act 2013, they called it preliminary. And basically it gives an introduction, and we are also going to see certain important definitions. Now, just for your information, the Institute Board of Studies material is clearly organized on the order of sections. It means you will find that the Institute material is in section number order. So section will follow section, right? That is how they have structured it, which means you will get a clear, coverage. But my dear friends, I've been teaching company law since 1992. I've been a teacher of company law, other subjects also, since 1992. And one thing I found is that company law cannot be taught that way. You will get confused. Therefore, as I am covering my topics, you will find that I am combining some sections, jumping and all that. Don't get worried. I will cover all the sections. While preparing this PowerPoint presentation for you, I have kept a list of sections with me, and I have ticked each section as I am including it here. So I have taken care. Okay, so that is how it is. Mr. Muhammad Aslam says, please keep the slide for at least 1 minute because I am writing in notebook. Aslam ji, my humble request to you, don't bother. Don't copy from my slide. Kyun? Because I am going to share it in this slide will be shared with you. After the session is over, I will share it with you. There is an uploading option for me. I will share this in PDF form. So whatever you are seeing will be available with you. Assume that. Don't take down notes. Rather, what you should be doing, Aslam, and every one of you who's listening to me here, there may be something that I'm saying, which is interesting or which is relevant from exam, which is not on the slide. That you take a note. 1. 2. Your questions that come to you as I'm talking, you will get a question now, note it down. So that later I will be briefly stopping and I will be asking you, do you have any query? Do you have any question? At that point, you ask this question, rather you type this question in, I will answer it. 2. Lastly, you will get sudden insights on the topic. Insight means idea, sudden link. You note that down. So that way your notes become a sort of a supplementary material to my slide. My slide is, okay, good. I'm not boasting, I'm saying you can use it, right? It is basically Institute ka material represented, little bit of frills, little bit of show. You'll see. Come on, let me ask you one thing. I am not a teacher of accountancy or cost accounting, where I can give you some shortcut method to solve your problem, blah, blah. I am teaching theory subject, yeah. What can a theory subject teacher bring to the table except making the topic easy, making the topic simple, making the topic relevant, and making it easy for you to remember so that you can go there to the exam, write the answer and get the marks and come out. Right? That is our goal here. In fact, since we are starting and this is the first session, I'll share with you one thing that I used to tell my physical students. Hindi cannot be used. I have been asked by the institute not to speak in any language other than English. Okay? One, I will be using thoda Hindi ka words, but one. Two, I am not a native speaker of Hindi. Okay? So you will have to somehow pick up my English. Wherever possible, I am using simple Asan words, which will be easy for you to understand. Okay? That is my humble request to Miss Jyoti. I hope this is not Jyoti Ja, Miss Jyoti. Okay? This is not only to Jyoti, to all of you here. I am not allowed to use any language other than English. Even my own mother tongue, which I am sure you will by now have realized is Telugu, Malayalam, Kannada, Punjabi. No. Marathi? Okay, guess. Chalo, whatever it is, right? So the point I'm making, my dear friends, lingua franca is lingua English. We have to understand in English. Okay, Jyoti, shall we do this? Are you up to it? Yes, you are. I'm sure you are. Listen, because you want to write this exam in English. So listen in English, understand in English, write in English, pass in English, become a chartered accountant. Okay? Good. Moving on. As I was telling you, okay, I'll share with this. Okay, you know Marathi. Manjunath got it. Okay. Good show. Now, let's look at the topic. See, Companies Act 2013, this is chapter 1, where we talk about definitions, etc. One more insight I'm going to give you is that Companies Act 2013, almost every chapter will have associated rules. The company's specification of definitions, details, rules 2014 is there. Like that, for every one of these chapters, you'll find rules are there. That way, studying this law is a little bit more difficult than it was in the 56 law. Before this 2013 law, there was an earlier Companies Act, not relevant for you, but just to know. There was a law called the Companies Act 1956. That was replaced by the 2013 Act in, obviously, 2013, right? So, and then the rules came in 2014. Now, having said that, the 1956 Act, everything was contained in the Act, in the section. Act means Act of Parliament. Act of Parliament means it's a law passed in the Parliament. When we say Act, it means a law passed in the Parliament. Got the approved by both the houses of Parliament, got the assent of the President, notified. Okay, there is something called the official gazette. It will be printed in that gazette, this law. Once it is printed, and that it will contain date of effective date. The notification will contain date from which this amendment or this law will become effective. From that day only, the law will become effective. Okay, very important. Act is passed in both the houses, Lok Sabha mein or Rajya Sabha. Then it goes to the President. President gives the assent. Then it doesn't become law at that time. Then it is printed in the official gazette. In that printing, in that notification, they will mention effective date. So from that effective date only, it will become law, which you and I have to approve and adopt. Okay? So that is how it is, right? Now, which means today, if you want to study company law, you should be aware of section and rule. Wherever possible, I will give you the rule along with the section. I mean, everywhere, I will give the rule along with the section. Section, then rule. Section, rule. So that you will know what is the entirety of the subject. Now, I have a beautiful question from Sunil Kumarji. He says, could you please tell us the whole subject briefly? Okay. Now, this is my problem. The Companies Act is a mammoth legislation containing 470 sections, 7 schedules. Seriously, I can't even talk about the whole subject. Okay. Except to say that it is about companies. This law is about companies. Formation, management, winding up, all the complete. Okay. Creation, sustaining, death. Complete story about company will be here. Okay. Now, so, but I can tell you the basic concepts which I'm going to do in the next slide. Once these basic concepts are understood, the details are easy to learn. Yeah, we can learn that. Okay. So in the lectures that follow, the material is so arranged. I have put it in such a way as to help you, enable you to remember the details with ease, so that you will remember, hey, this is what it is. But suppose, in spite of this, Sunil Kumar says, I want to understand what is company law. Tell me, sir, in one slide. Okay, I will tell you. The entire framework of the company law is to enable the following two purposes here. What are they? The two pillars. Can you see the two pillars there? Protection of the investor, protection of the creditors. The company form of organization came as a blessing. It came as a boon, because first thing it did was it enabled entrepreneur, it enabled businessman to collect more money from everybody. Earlier, businessman had to put his own money, take a risk. Therefore, only rich people could create business, become businessmen. Other people could not. But once company came, anybody with a good idea and capability to run the business could go to the other people, take money as share capital, and using that money, they will build the business, run the business, and pay dividend to the investor. This is a fantastic idea. Forget abroad. In India, we have two great examples of two great businessmen who could build great businesses. See, they became rich, no doubt about it. But in that process, they made a lot of people rich. And they are employing lakhs and lakhs of people. One man is Dhirubhai Ambani. Today, you see Mukesh Ambani, you think it's rich, Anand Ambani, marriage, all that you're talking. But once upon a time, Dhirubhai ji was working in Sharjah in a petrol bunk. That man had a dream. And that dream could be possible only because he formed a company called Reliance Industries Limited. And this company went on and still going on to make money for its shareholders like me, and also giving salary to its employees, satisfying consumer, are able to see how much a company can impact on society. Another man who created totally a great value proposition was a man called Narayana Murthy. I'm sure you heard of him. His daughter is now married to the Prime Minister of England. See, that is news today, but Narayana Murthy was he was in the IT industry, an ordinary middle class man like you and I. But because of the company form of organization, he formed a company called Infosys Limited. And Infosys Limited went on and to become what you know today. It is one of the top IT companies in the world, not just in India. It is listed on the NASDAQ, the New York Stock Exchange, right? And if I'm not mistaken, Reliance is also a Fortune 500 company. And I don't think Infosys is a Fortune 500 company, but definitely it's a powerful brand. Why I give these two examples? Because, and I'm not giving possibly the Birla Group or Tata, though Ratan Tata himself is a great man, because company form of organization, you have seen with your own eyes how ordinary people without money backing, without second generation, without a rich father or uncle or father-in-law can build enterprises and help people. That is the greatness of the company form of organization. But it also brings with it one danger or many dangers. One is the same. You see, I gave the example of two honest businessmen who earned money and also rewarded shareholders and who went on to build great brands and businesses. But for every Narayana Murthy, there are 100 frauds. For every Dhirubhai Ambani, there are 200 frauds. Trying to take the money from the shareholders, misuse it, siphon it, run away. Now, so the company law is meant to prevent these people from misusing the funds of the shareholder, because shareholder has no way to manage the funds. It is being managed by the director and the owner group, the promoter group. So one of the main purpose of company law, my dear friend, is to protect the investor and safeguard his investment. Now, whether they have done it, how they have done it, is it effective? That is a debate. But the purpose of this law is to do that. So every section of the Companies Act, as we keep moving into the sections, as we go to share capital, as we go to prospectus especially, I will show you that there is investor protection. Understand this one core principle. Similarly, when you have formed a company, the company has limited liability. You know that. Company does not have limited liability, Baba. who has limited liability? Shareholder has limited liability, right? Which means what? The shareholder, once he invests the money, if there is nothing to be paid, he has no liability. And if the company is not able to pay its debts, if it becomes insolvent, who will be the sufferers? Of course, the shareholders, but more importantly, the people who have lent money, the creditors. So another pillar of company law is protection of the creditors. Now, a third aspect is also now added, not a third pillar, but a third concept, which is called public interest. When a company becomes so huge, it starts employing lakhs and lakhs of people. It starts impacting on consumers. It starts impacting on the society around it. Then any decision taken by that company will also have an impact on everybody, the public at large, which is called public interest. Who protects the public interest? The central government. Because why the central government? Because the company law is a central law. I mean, without going too deep into it, because you already know your constitution well, we are bicameral, means two houses of parliament. Also, we are federal and we have two governments. We have a state government, which is very powerful, and also a central government, which is equally powerful. The division of power between central and state is tight, which means central government has certain powers, state government has certain powers, which means company law is entirely central subject. State government has nothing to do with company law. Similarly, as you very well know, Income Tax Act is a central subject. State governments cannot tax income. Earlier, even sales tax was state subjects. Now, sales tax is also central subject, GST. Okay, so these are all central government. Therefore, the central government is the appropriate government. So anything that a company does, which is not good for the public interest, the central government has the right to come into and ask, what are you doing? You will see that also, etc. So the birth or death of a company may have impact upon the national economy. There are companies like this which have, so the central government has been given powers. Now, central government, when I say, you can't blindly go to Delhi and say, where is central government? Because the powers of central government, the powers of the executive are divided between what we call ministries. For example, income tax comes under the Ministry of Finance, taxation. So the company law comes under a very important ministry called Ministry of, not Carlegian, this you make a note now, Ministry of Corporate Affairs, MCA, Ministry of Corporate Affairs, very important ministry which controls. The current Minister for Corporate Affairs is no less a person than the Finance Minister herself. Nirmala Sitharamanji is the Minister for Corporate Affairs also. Okay, that is so powerful a portfolio that the Finance Minister retains it and doesn't want to give it to anybody. So, Minister of Corporate Affairs, who takes the decision. Of course, below them, they have a lot of people, right? So, short form of Ministry of Corporate Affairs is MCA, right? So, yeah, I'm happy to note that Reliance is also quoted on NASDAQ. Thank you for that. And Aslam, thank you very much. Completed till chapter 5 when my books came. Okay, that's good. Nice to know that. Thank you, sir. Thank you very much. Keep the messages going, and I love this, and I'm happy, and of course waiting for those questions to come, which make me see. I'm now 57 years old. Okay, I've been teaching company law. I'm a practicing chartered accountant, 35 years of experience. I'm a corporate trainer. Okay, so happy where I am. Point I'm trying to make is, why do I sit every time I come and sit before this computer, talking to the computer, but I'm talking to you. I'm talking to every one of you. You are the future of my institute. You are the future of my institute. So I want to impact on you. I want you to understand the importance of becoming a chartered accountant. And I want to teach this subject that I love. So that thing. But one thing is, many times when I think I am teaching, students are actually teaching me, sir. Why? Because you ask me such questions that are so interesting that I do research. And I come back to answer your questions and I learn. So teaching is learning, Baba. And learning is also, in a way, teaching, right? So having said that, let me move on to some very brief introductions. Companies Act, I already told this. It extends the whole of India, including, thanks to the new decision, the whole of India, including the state of Jammu and Kashmir, right? And Section 1. These are all standard. Okay. So now the Companies Act applies to which type of companies? Companies incorporated under this act, means 2013 law, or under any previous company law. For example, before this law, the 56 Act was there. Before the 56 Act, for your information, there was a 1920 law, British law. Companies have been incorporated under that law also. In fact, there are many companies in India which are older than the Companies Act 56 itself. I'm not joking. EID Parry Limited. Okay, it celebrated 150 years. It was formed during British period. There are many such companies. In fact, in those days, I used to have the physical charge certificates, where I used to have some old certificates used to come to me. I used to take at the time, no mobile and all. So I used to take a Xerox copy and keep it, but I had to give it back. So, okay, that's good. Shivlani is telling, please don't forget to share your personal experience as CA. Thank you. That's nice of you, but it's subject to timing. I will definitely do that. So insurance companies, banking companies. Now, but remember, insurance companies come under some other authority called IRDA. So as far as company law is concerned, they have to comply with the Companies Act. But there are many sections of the Companies Act, especially relating to presentation of accounts, which are governed by the IRDA regulations, the Insurance Regulatory and Development Authority regulations. Similarly, the banking companies, they are also companies. So to that extent, they will come, their top notch is in the hand of the Ministry of Corporate Affairs. But they will also come under the direct control of the Finance Minister through the Ministry of Finance, through the Reserve Bank of India, RBI. Okay. So they'll have dual control. But then, in as much as they are companies, they will also be bound. But in many sections, they will say, this section does not apply to banking company. This section does not apply to insurance company, like that. Just when I come there, I will tell you. Or they may give exemption for banking company, like that, because of the nature of their businesses. I have a question here from Manoj. Tata Group, 1860, 100%. See, we spoke about Dhirubhai Ambani ji, but Nusarwanji Tata, he is the man whom we should talk about. Not Ratan Tata ji is great, no doubt, but the man who formed Tata Group, Jamshedji Tata, then Nusarwanji Tata, they are the people who formed. They were the guys, Parsis, who in the British period, they started small business, and developed it, shipping, trading, and they made it into textiles, steel. Then steel came. That was Jamshedji Tata. The steel came. And you should read. See, if you want to know more, I will tell you, just as an interest. This is absolutely, you will get angry with me because you're all studying CA and all. You should not read. But if you want to read, there are two beautiful Amar Chitrakada comics about Jamshedji Tata and Nusarwanji Tata. Please read it. It will give you a lot of insight into, you will think, how is it linked to my company law? I'm telling you, you will understand better how these people formed companies, how corporate governance was there even at that time, and how it happened. Okay? And somebody is asking me, in which year first Companies Act in India? See, if you ask me in India, in independent India, it is a 1956 law. 1st April 1956 only, the first India Companies Act of Indian Parliament came. Before that, we were following the 1920 Act, which was not passed by the Indian Parliament. It was passed by the British Parliament for India. Okay? And it was adopted under the Government of India Act. And it became applicable to the dominion of India only. A British law applicable to India. It was very funny. There was a 1922 Income Tax Act, for your information. Check it out. 1922 Income Tax Act. That was replaced by the 1961 Income Tax Act, which is the first ever Income Tax Act passed in the Parliament of India, which you're studying. Okay, good. Now, so this Amachitrakada is something I'm just casually telling you. There's a lot of nice AC case. It's all available on Kindle Unlimited. You can just download it and read it for free. It's hardly half an hour read. You will improve your English. You will learn something about our country, about business. It's a suggestion, okay, when you're free. Similarly, companies engaged in generation or supply of electricity. Now, they also come under the Department of Energy. Plus, company. Company is governed by any special law. For example, you have the mobile network companies, so-called network service providers, the cellular phone companies. They come under what is known as the TRI, okay? TRA, which is that Telecommunication Regulation Authority of India, TRAI. So they will come under TRAI. You know all that, no 4G, 5G, that fellow. So these guys come under that law also. So they are company also governed by TRAI. Just remember that. And notified bodies incorporated by any law subject to exceptions, modifications or adaptation. Okay. In respect of companies mentioned in B to E, the Act shall apply except insofar as the said provisions are inconsistent with the provisions of such special act. Where there is a conflict, the special act will apply. For example, if there is any RBI guideline or the Reserve Bank of India Act talks like this, then Banking Regulation Act, then that will apply and not the Companies Act. Okay. In many cases, the Companies Act itself will exempt some of these companies. We'll see that when we come. Good show. Moving on to the next slide. Suppose the Companies Act is not defining anything. Okay. Then you can look to other enactments. Now, before that, later on in your intermediate studies, you will learn something called interpretation of statutes, where you will learn about the parts of an enactment. Okay. In that, you will be told that there are something called definitional section. Means before the law begins, they will give a section, usually section 2. For example, the Contract Act, Indian Contract Act, section 2. Okay. Section 2 gives the definition. Most laws which are passed by Parliament in India, you will find the definitional section will be in alphabetical order, except the Contract Act. The Contract Act definition sections are in logical order. Check it out. The Contract Act, if you know them by heart, you will remember. The Contract Act, when one person signifies another his willingness to do so promise, or that a promise, he is said to make a promise, and the person to whom the offer is made signifies doesn't there too. You will say automatically there will be a definitional logic will be there. But in the Companies Act, section 2 is the definition section. It contains definition of many words used in the Act, terms used in the Act. They are arranged in the alphabetical order. Okay. Today we are going to see some of these definitions. That's what today's class and next class are going to be only definitions. Definitional sections are internal aids. You should and can be used to interpret the Act, and they are part and parcel. See, in this case, section 2, very much a part of the enactment can be used. One more thing. Suppose a word is understood normally in one sense, but it is defined restrictively in the law, then you can only give the restrictive meaning as far as that law is concerned. What I mean by this, I will tell you later on, either Aj or maybe next class, I will be giving you the definition of relative. Okay. Bandhu. R-E-L-A-T-I-V. Relative. Everybody is relative. Yeah. Your father's elder brother is your relative only, na uncle. And his son is a relative, na cousin. Sorry, under the Companies Act, no. The definition of relative is very, very restrictive. We will see that later. So under the Companies Act, relative means restricted definition. Like that, you will find there are many sections which are defined here. That definition you should remember. Okay, later on, when we come across these definitions, I will be mentioning it. I will again give you, don't worry, when I come to prospectus, I will again give that same definition. But I cannot teach the way I'm teaching now. 100% Pooja, Miss Pooja Soni, I will definitely give this to you. 100% you will get it. Don't worry. It will be uploaded. Okay. You are putting this message again and again. I think some problem is there. You will be you're repeating this message. Something is happening. Income tax also is section. You are absolutely correct. Section 2, 21D in 21D. Okay. What is that? 220 income. 220. 2 within bracket 22 income. E. 222E. Like that. Correct. You are absolutely correct. And always remember, some people will say, sir, I don't like law, sir. And then later on, they will say, I want to become expert in income tax, sir. My dear friend, income tax is also a law. So develop a love for law, automatically you will become an expert in income tax, because income tax is also a law. The same tools that I'm going to teach you to understand the law here is also going to be useful to you in understanding the Income Tax Act. Except that it's a lot more complicated and it has a lot more ifs and buts, exceptions and all that. But the same thing, it's law. The same principles apply there also. Okay, is the point. Don't try to follow my lecture with the study material. Okay, this is chapter 1 of the study material. Don't try to do that. Rather, just aram se sit back, keep a notepad with you and just suniye na, listen to me. That's all. And slowly, don't do this thing of checking in the book and all that. You can always do that. I'm not saying don't do it. You will waste your time because you will miss out on some things I'm telling which are not in the material, but which are relevant. So don't bother about that. 100% on my heart. Everything that I'm teaching is there in the material. Everything is in the material. I will teach you. Don't worry about that. Okay. Relax and think. Section number 2E, 2B. Great. Thank you. Sir, please upload this. Hey, you're putting this again and again, madam. Something is going wrong. Stop doing this. I will say, I will upload it. 100% I will upload it. Okay. Muhammad Aslam says, I scored the highest marks in law. Wow. Great, sir. I'm so proud. Definition can be directly asked in exam. No. Good question, Jayendra. From now on, we don't have to mug up definitions. Remember the definition. They will not ask you a direct question like, give this definition like that. Never. But if you don't remember the definition, you might have a problem later. For example, I'm going to teach you an important definition, hopefully today, called small companies. So that small company definition got amended recently. Now, many sections do not apply to small companies or differently to small companies. So the question in the exam would be, they will give you some information and you may have to remember the definition of small company and test it and see whether this company comes under that definition or not. So this is more for foundation. We are laying the foundation. You will not get a direct question. But if you don't remember this, you may end up there. So that is why I'm not going to give you word for word. I'm going to give you in some way that you can remember it, right? Okay, you're saying, yeah, in some laws, it could be a different section, not necessarily two, right? And where there are some words which are used in this act, but not defined, then that would be if it is defined in the Securities Contracts Regulation Act or the Securities and Exchange Board of India Act or the Depository Act. These three laws deal with listed companies. So where these laws are defining that word, that same definition will be applicable here. For example, the Securities Contracts Regulation Act defines the word securities. That is not in your syllabus, not even in your final syllabus. But the definition of securities, if it is not defined here, you will have to look for it there, right? So this is what they say, where they are not defined here, but they are defined there, then there. See, when a word or phrase is defined as having a particular meaning in an enactment, it is that meaning alone which must be given to it. Okay, unless there is something repugnant, unacceptable in that. You see, for example, certain things, if you say, certain words, will apply only to one gender. Suppose it amounts to using it for another gender, it may be repugnant. In that case, you have to ignore it. Other than that, definitions are to be straight away applied per this law and not generally accepted meaning and things like that. For example, the word sales is defined here. The word net worth defined here. The word free reserve defined here. Now, to answer the earlier question again, they may not ask you define free reserve, but not only here, my dear friends, even when you go to final, there are sections in final syllabus which will use the word free reserve, net worth. You will have to remember it. So You can't say, sir, that is in intermediate syllabus, sir, I can't write, sir. You can't tell like that. Because definition of a word is for the whole law. The institute has put a cut Lakshman Rekha and said up to this section in intermediate, beyond that in final. You can't put that Lakshman Rekha as a professional. You will have to remember these definitions till, you want to be in this CA profession, then you have to remember. For example, net worth, free reserve. These are all very powerful definitions, which are applicable throughout the Act. You'll have to remember. Yes, you are absolutely correct. Definition of small company was amended on 19 September 2022. Great. Thank you. Are you from Karnataka? Yes, I'm from Karnataka. No. Are you from Karnataka, Sunilji? Okay. Right. People keep asking, where are you from? I keep telling, I'm from Punjab. I'm from Rajasthan. I'm from Assam. I'm from Nagaland. I'm from Madhya Pradesh. I'm from Chhattisgarh. I'm from Telangana. I'm from Andhra Pradesh. I am from Kerala. I am from Karnataka. Yeah, maybe I'm from Tamil Nadu, but I am from India. Okay. I am from India. And I will never ever forget that. I am from India. Right. Now, what is a company? Right. The word company is beginning with C. Therefore, it comes in 220. So suppose I wait till I come to 2 subsection 20, in the institute material, I cannot teach you. So I have to define company first. Also, you should understand that there's another term called body corporate. Body corporate. Body corporate is a bigger circle. Body corporate or corporation includes a company incorporated outside India. Are you able to understand? Body corporate means any entity which has separate legal entity, you remember, and perpetual succession. Body corporate means separate legal entity, perpetual succession. A limited liability partnership is a body corporate. A foreign company, a company incorporated outside India is a body corporate. Of course, a company incorporated in India is also a body corporate. That is why they are using the word includes a company incorporated outside India. So, what do I learn from this? Whenever in the Act, whenever in this subject, I am hearing the word body corporate, it means foreign company also included. Clear now? The minute you say body corporate, remember Indian company or foreign company, both are included in this. Okay, but specifically they say it does not include a cooperative society. And there are no other notified bodies, but they said any other notified. So cooperative society alone, they are not including in body corporate. Okay. Other than that, for example, LLP is a body corporate. Limited liability partnership is body corporate. Though it's a firm partnership, since it has limited liability, they have made it a body corporate, which means it has a separate legal entity, which is different from its owners. The minute there is a separate legal entity, automatically there is a company. Since you learned this in your foundation, and since some of you are also good at it, I'm not going to repeat it and waste my time, but except to suffice it to say, separate legal entity and perpetual succession, body corporate. So body corporate is a big set. Within that big set, you have one type of body corporate, which is company. So sirf company means a company incorporated under this Act or any previous company law, right? Not only under the Companies Act 2013, but under any of the previous law. So Indian company only is called company. What do I understand? Suppose I see the word company in the Companies Act anywhere, in any section, anywhere I see the word company, then 100% foreign company not included. Because by definition, company means company incorporated under this Act or under any previous company law in India. So only companies incorporated in India will be called company. If they want to include foreign company, they will either say applicable to company incorporated outside India, or they will use the word body corporate. The minute they use the word body corporate, automatically company incorporated outside India is also included. So Reliance Industries Limited is incorporated under the Companies Act 1956. It's a company. Okay. ICAI, Institute of Chartered Accountants of India, is a body formed by the, it is a body corporate. It was formed by an Act of Parliament. It's not a company. it is a body corporate formed by an act of parliament. Okay. So it's nothing to do with Companies Act. Nothing to do with Companies Act. It is formed under a separate law, which is called the Chartered Accountants Act. In that, it was formed by an act of parliament by which it has come. You, Miss Soni, I will upload it, madam. I will upload it, madam. But not today, tomorrow, I will do it. Don't worry. Okay. Yeah. I will upload it, madam. Don't worry. Okay. Well, I will not normally upload it in the first session of any topic because sometimes I'll make corrections also. Therefore, my usual custom is when the topic is over, that day or the next day, I will upload the topic. This is my standard practice, which will be continued now also. Okay. Instead of worrying about all this puja, listen to my lecture. Listen. Suni, listen. Everything, don't worry. Everything, your exam is going to be when long later. Before that, it will come. Don't worry. The first revision I'm giving you. You don't have to read the book. For your sake, I'm literally reading the book for you. All you have to do is fold your arms, or don't even do that. It stands it like this and listen to me. Don't worry about all that. It will happen. Sir, you are saying company doesn't not include foreign company. So foreign company doesn't include. Yeah. Hey, what do you mean doesn't require to be registered in India? It is incorporated outside India. But you are asking me a loaded question, which is in final syllabus. How can I teach it now? Your question is, if your foreign company wants to set up a business in India, should they get themselves registered? Yes, they should. There is a formality for that. In a later chapter in the final, you will study that. But they are incorporated outside India. Got it? So they are not company, body corporate, company incorporated outside India. There is a separate sections for that. Separate chapters there on foreign company where they have to get themselves not registered, but they have to inform the government of India that they have set up a place of business in India. And so that the government of India will keep track of it. The registration is possible only once. A company is already registered abroad. How it can be registered in India? But once they come to India and want to set up business, branch, etc., then they have to comply with certain formalities. They have to file certain documents, all of which will be taught to you when you come to final. Okay? Correct. Exactly. If only company is mentioned, it means only Indian company, foreign company not included. Correct understanding. Your understanding is correct. Okay. Okay. Incidentally, our class will go on till 8:30, not 9 p.m. 2.5 hours class. 8:30 it will get over. Okay. Oh, very good. That's a very, very positive statement given by Alok Shivlani. Yes, I will meet you in final. Inshallah. Because for both of us, for you should clear the exam and come. For me, inshallah. If place of business in India but operate from outside India, which one is this? Hey, come on, brother. You are not Amit ji. You are asking again an incomplete question. I will not ask you where the place of business and all. I will ask you, where was this company incorporated? Under which law is this company incorporated? Can you answer me that question? Don't forget place of business, operations, blah, blah. Where is this company incorporated? Which law? India or outside India? If you say India, then company 2 subsection 20. If you say outside India, then incorporated outside India, it is a body corporate. It can also be a foreign company. Okay. That's all. So incorporation is more important. Where is it incorporated? Which country? That is more important. Okay. Now, so just quickly, a company is, this is definition of company just for the law section, but general understanding of company is artificial person created by law, separate legal entity, purpose of succession. What is the greatness of separate legal entity? Na? Company can sue and be sued in its own name. It can buy, hold and deal. Otherwise deal means mortgage, pledge, rent, lease, everything with property in its own name. Company, unlike a partnership where partner will be entering into on behalf of the firm. Firm cannot directly enter, only partner. Here, directly company can do. Perpetual succession. Company will continue to exist even if all its members die. Okay. You know all this because you studied it in right from maybe +2. You have been studying it. Anna, place of effective management is for Income Tax Act, residential status. This is company law. Don't get confused. When you're studying multiple law, always put compartment. Here, incorporation, because there are so many different types of residential issues. That's why I'm saying don't get confused. Company may be incorporated in India. Okay, one more thing. If your company is incorporated in India, wherever its effective management is there, it will become under the Companies Act, it is a company act. Got it? Under the Income Tax Act, residential status is up to you. Okay. Their place of effective management, board of directors, etc., etc. Okay. Correct. Incidentally, I'm a practitioner or I practice income tax. I'm not an expert in income tax. I don't teach income tax. So don't trouble me too much with income tax and all. But for 35 years, I've been practicing income tax very, very satisfactorily, financially satisfactory to me. Very, very happy with my clients are also happy. But I am not an expert in income tax. Never I will claim that I'm an expert in income tax. It's a very complicated law. Whenever an issue comes up, I will again take the law. I will read the section. I will understand it. And I will try to advise my client. The reason is this is one Income Tax Act, this one law keeps on changing. So every time, broad principles I know, but specifics I will not try to waste my time remembering. I'll just Taxman Act and I will load it on my screen in the office. We have a big screen. I will load it. My colleagues will be sitting, client will be sitting. We will discuss it. Then and there I will understand the law and advise them. Because that is easier for me than remembering this stupid enactment with which year, when, which date it became effective. Who knows? Yeah, I can't. I'm practicing 35 years. So, but of course, in my exam, I got marks. That time I studied. For that 1 year, I studied. Thorough Vinod K. Singhania, no book. And I attended one great lecture by one great teacher of income tax, my guru, Professor C.A.R. Bhupati, past president of our institute. Swear on him. This donkey, he taught income tax, so that this donkey went and got 65 marks. And I'm happy. That's it. Okay. Good show. So, important two definitions are there. Understand. When a company is operating and functional, the owners are called members. So, who is a member? Very important definition. Remember it. We'll be using it again and again. Word member. Every subscriber to the memorandum of the company who has agreed to become a member and on its registration shall be entered as a member in the register of members. So, subscriber to the memorandum is a member. Every other person who agrees in writing to become a member and whose name is entered in the register of members. There are two ways of agreeing. Once the company is incorporated, everybody who signed the memorandum agreed to take the number of shares. Company is registered. All of them become member automatically. Their name will be entered in the register of members. Every other person after that, after the memorandum, after the registration, whatever, whoever, so they may either apply for the shares and the shares will be allotted to them. They may apply for the shares and the shares will be allotted to them. This is called primary market or allotment. Got it? Allotment. First time, the share is created for the first time and he is becoming the first owner. It's called, in the share market, we call it primary market. Initial public offer. Shares are issued to the public for the first time. Issued for the first time, applied for and allotted. So when he applies, he agrees in writing. When his name is allotted, when he is allotted, contract completed, we will enter his name in the register, he becomes member. Subsequently, he may sell the share to another person. That gentleman or lady should send a document to the company, which is called instrument of transfer. When we come to share capital, I will talk more about this. Allotment and share capital, we will talk more about this, where I will talk to you about transfer. So the transferee should send a document to the company, wherein he will apply in writing or she will apply in writing to become a member. The transfer will be registered. His or her name will be entered in the register of members. Now, then he will become member. So subscribe to the memorandum. Every other person who agrees in writing to become a member and whose name is entered in the register of members is a member. Every person holding shares of the company and whose name is entered as a beneficial owner in the records of a depository. Now, small point. Once a company shares become listed, we will see that there is compulsory dematerialization. So if you want to, once you become a member of a listed company, you cannot hold the shares in physical form. It will be allotted only in dematerialized form. It will be credited to the account of your depository. More about it when we come to dematerialization. I will teach you share capital at the time in more detail. Right now, understand that a listed company ka share cannot be held in dematerialized form. It will be held in electronic form in the records of a depository. Right, sir? When you are going to sell it, what happens? Matter of seconds. Some of you may be already expert in online trading and all. So what you'll do, you'll open your broking account, check, you'll go there. Today what I'm going to buy, Dubacore Limited, check, buy. Then suddenly Dubacore Limited keeps going down, sell it off. Now buy, sell. All this will be happening in instantaneous, momentary transactions. So that cannot be kept track by the company continuously. That will be tracked by the depository. So that is why this third definition is there. Every person holding shares of the company whose name is entered as beneficial owner in the records of a depository. So at the end of every day, the two depositories are there. They will send the details to the company. Based on that, the company will update the register of members. But the basic entry will be in the register records of a depository. So that also, those people also become member. For example, I didn't do it, but if I do it, I may purchase Infosys share, 5 shares of Infosys, right? My broker will, online, I will go and buy, whatever it is, my broking account is there, automatically it will be, the transaction will be open transaction, somebody else is selling Infosys, price checkbook over 5 shares. Now, based on my broking account, automatically my DP account will be known to the software. Directly, these 5 shares will go to the credit of my depository, records of my depository. Then I will automatically become a member of that company. The other person who sold it will no longer be a member. Instantaneous, check. No need for any delay. Okay, more about this when we come to dematerialization. More about it. Okay. Yeah. Member and depository are totally different, Baba. Member is the definition given here. Depository is the authority. Is a kind of record keeper who will contain electronic records. So all the shares of companies which are listed, they will be converted into electronic form, and those records, that data is collected and kept by the depository. So any change in the members, it will be automatically recorded in the electronic records of the depository. So the depository is there. There are 2 depositories in India. Karthik is giving the name of one. The other is also there. Karthik, can you give the name of the other depository also? You have given NSDL. Okay. One more depository is there. 2 depositories are there in India. Because the word depository has come, I have given so much explanation. More about it when we come to dematerialization. In detail, we will study it. Okay. But Jyotiji, your question should be different. Depository is not NSE and BSE, Aslam. NSE, National Stock Exchange, and the Bombay Stock Exchange are stock exchanges. They are mandi. They are market. Hey, brinjal ka market hai na? Like that, share ka market hai, where you go and buy and sell share. So if you want to buy brinjal, you go to brinjal market. You buy. Somebody will come to sell. Like that, if you want to buy share, you have to go to share market. That share market is called exchange. Stock exchange. That stock exchange, in India, we have only 2 active stock exchanges. One is National Stock Exchange, other is Bombay Stock Exchange. Both are electronic, both are online, both are open and closed online. You can go and have a look at them every day, 10 a.m. They will start, close at 3:30. And during that time, if you have a broking account, you can go buy, sell, Dubacore Limited share. Then after you buy, it will start going down. Keep on watching, make loss, come out. Okay, sorry, not that. So enjoy. It's a democratic country. Everybody has the right to make a loss. Okay. CDSL, correct. Good. More, I will not expand now. Okay. Mr. Pranay, Nasdaq is in New York. That is a New York stock exchange. Don't worry about that. Okay. Now, in India, we have only two. If you are a citizen of America, then Nasdaq is also there for you. Good show. Okay. See, immediately, Karthik, I know, I think is the authority on stock exchanges. 9:15 a.m. to 3:20 p.m. Thank you, sir. Yeah, that's a good question, Aslam. Your question should be worded this way, na? Whether a body corporate can be a member. Yes, it can, because a company can buy and sell in its own name, na? So share is also a property, right? So company can apply. Yes, body corporate. Some formalities are there, but otherwise, yes, a body corporate, it includes a company can be, member, a body corporate can be a member. I'll put it that way. Now, the real question Jyoti ji should have asked me was, member and shareholder, are they the same? Member and shareholder, are they same? Actually, shareholder is not defined in this law, sir. The word shareholder is not defined in this law. Only the word member is defined. I am a very puristic user of words. I will use the words very, very carefully. So rarely you will find me using the word shareholder. I will always use the word member. That's what I'm talking. But even the Companies Act, loosely drafted 2013 law, does not make that distinction. Some cases they use the word shareholder. In those cases, they are using it as if it is synonymous. Synonym means word having the same meaning. Synonym means S-Y-N-O-N-Y-M. S-Y-N-O-N-Y-M. Synonym. Word having the same meaning. Opposite is antonym. Words having opposite meaning. So, words having, so they are using the word member and shareholder synonymously, as if they are having the same meaning. In my humble view, that is not correct, because member is defined, shareholder. But still, since the company MCA itself does not make a big distinction, I will not press that point. Synonymous. But there's a small difference. See, member is a person who applies in writing and whose name is entered in the register of members. Suppose a member has sold the share. A member has sold the share, right? Then his name is still in the register of members, but he is not a shareholder. He's not holding the share. So he's not a shareholder. Similarly, there could be a guy who acquired the share, but his name is not in the register. So he is a shareholder, but not a member. So there are two categories are there. A person who is a shareholder means purchased the share, but not entered in the register of members. Shareholder, but not member. And there could be a guy who sold the share, but not removed from the member register. That will be a member, but not a shareholder. But this is very small gray area. Other than that, everybody who is a member would also be a shareholder. Am I correct? So there you have to be a little careful. That's all. Because under the Companies Act, rights are available to a member. So suppose your name is, you have sold the share, but your name is not removed from that. You cannot claim the rights of a member as against the guy who bought it, because he is the real member. Okay. Shivani Kashyap, I think you have not understood what I said. I cannot speak Hindi. I know it's a crime in this country. I cannot speak Hindi. How will I explain to you in Hindi? You tell me, madam. Please understand my predicament. Sorry. Okay. I appreciate what you're saying. My teaching is good, but please, sir, little explain in Hindi. If only I can do that, madam, I would have been a trainer across India. Because I don't know Hindi only. So many companies in Gurgaon have invited me to conduct training program. Condition, Mr. Srikanth, you ought to speak in Hindi. I said, sorry, madam, I cannot speak Hindi. Okay. If only I know Hindi, why I will be here? I will be Prime Minister of this country, I think. I don't know Hindi. Okay. समझे ना? मुझे नहीं मालूम. क्यों करना? What to do? क्या करना? What to do? See, I'm taking bad Hindi. Ganda Hindi है ना? So let us not kill Mother Hindi. Let us protect her. I will speak in English. You will learn English and listen to me. Okay? Please. Friends, I know this is a major problem for those of you who come from the, as we call, the Ganges belt, who have not learned English as a first language. Humble request to you as a teacher and as a well-wisher. I know it is tough, but somehow pick up this stupid foreign language. Somehow make it your language. Because in the long run, if you want to be successful as a CA, this dirty language, English, you have to learn it. Whether today, tomorrow, aajkal, somewhere you have to do it. Start today. Make up your mind. Okay? I know it is stupid. That language is Ganda language. The whole world should speak only Hindi and Modi ji is working for it. But till then, France, they will speak French and English. Germany, they will speak French and English. German and English. America, they speak only English, American English. UK, they speak English. World over, Japan, they speak English. Korea, they speak English. If you want to speak to Korean, if you want to speak to Japanese in a globalized world, you will have to know English now. So think about it. Okay? Telugu is... Okay. Yeah. I wish Telugu is my mother tongue, because of all the languages in this country, you know, which is the most beautiful language? Telugu is not my mother tongue, but the most beautiful language of all the languages spoken in this country, it is Telugu. I didn't say this. It was told by Krishna Deva Raya in a famous book, Amukta. He has written. He has not written. He was told by God, of all the languages spoken in your country, the most beautiful language is Telugu. Okay? Yeah, see, I'm not trying to I know some of you will get angry with what I'm saying, English and all that. Try to, is what humble suggestion to you. Humble request to future chartered accountants. Because, see, suppose tomorrow some of you want to go abroad, do CPA and all, your such goals and ambitions are there. CPA exam not in Hindi, no. What do you say? You have to write in English, no. CISA, I'm a certified information systems auditor. CISA is not available in Hindi. So kindly, any faculty who teaches in Hindi is actually doing damage to you. By speaking in a language that you understand, they are spoiling you, because they are not making you learn a language which is important for you later on in your life. So you understand now? By teaching you in Hindi, they are preventing you from learning an important language which is necessary later on in your life. When you go that high now, when you become DG, when you become Deputy General Manager and all, suddenly promotion will not come for you. You will not know why. Okay? Because Hindi, English. At that time, who will go and learn English, you tell me? Can you learn English at 39, 40, 42? Very difficult. Better learn now. I'm telling this because I've been a corporate trainer. For 27 years, I've been training corporates across the country in English. But I find so many people attending GMs and all cannot understand English. Therefore, they are not able to go beyond. They have become GM and that's it. Beyond that, he cannot go in his life. He also knows it. Okay, but though he's talented, stagnated. Correct. Now, I'm not trying to make a big issue about this. If only I can speak Hindi, I will speak so that I can communicate it to you. But I don't know Hindi. Maaf kar dijiye. When the company is being wound up for the purpose of dissolution, we use the term contributory. So long as the company is functioning, these fellows are called members. Once the company is to be wound up, closed, khatam ho gaya, then they become contributory. The word, because they will be contributing. Not relevant, but the definition is there in the definitional part. That is why I'm teaching this. This word will become relevant to you only in final. When you come to a topic called winding up. When the company is being closed, wind up. At that time, anybody whose name is there as the member, he will become contributory. Suppose it's a partly paid share, then he will have to contribute towards the asset. Fully paid share, then he will not have any contributory. But suppose the company has a surplus. After all the assets are sold, liabilities are paid. Something will be left now. Who will get that? Contributory. That's why it's called contributory. Even a fully paid up shareholder is a contributory. No liability. But he is entitled to the surplus remaining after the assets are sold and liabilities are paid. Okay. Thank you, Alok ji. Thanks a lot for understanding. Good. Now, there is something called the Register of Companies. Okay. That is the Ministry of Corporate Affairs. Okay. has an important officer, who is called Registrar of Companies. Registrar of Companies. You will have to remember this guy, Registrar of Companies. Short form is ROC. This earlier, this guy was a very powerful man. Registrar was very powerful, and he was sort of sitting in every state. There will be one registrar, all that. But point is, today everything is online. The entire register is now online. The register of companies is now online. If you can have a look at it, you can go to the ministry website and you can have a look. You can put if you know the certificate of incorporation number, you can put it, incorporation number, then SIN number, company incorporation number, you will get full details of that company. If you don't know, then if you put name of the company also, all the companies with that name will come. You can search. You can have a look. Basic details will come. You can read about who are the directors, what is the capital, public information. This register is maintained by the registrar of companies. So whenever we use the word registrar, then it is registrar of company. Later on, okay? Later on, I'll tell you more about this guy, registrar of companies. He's a very powerful man. Many things he has to approve. Earlier, he had a lot of powers. Now, slowly they have removed those powers from him, and it is now going to another gentleman above him called regional director. The Ministry of Corporate Affairs has 4 regions: North, West, East, South. So the 4 regions have RDs, regional directors. These regional directors are very powerful. Below them, each state has registrars. Each state there is one registrar. Some states like northeastern states have single registrar sitting in Guwahati. Some states, 2 states, have 2 registrars. 2 states have 2 registrars. This means one state will have 2 people, 2 registrars of companies are there. Which are the 2 states? 2 states have 2 registrars. Which are the 2 states? Small quiz to keep you going. There are 2 states in India which have 2 registrars, not 1. Which Maharashtra is correct. Maharashtra is 1. Which is the other one? Anybody? It's a forgotten state. We have forgotten the state. We have forgotten the people in the state exist. They have no identity. Their language has no identity. Nobody wants to know them. Only when we want vote, we will visit them. Not Karnataka, sir. Karthik got it. Tamil Nadu. Yeah. Unfortunate people of Tamil Nadu, we have 2 registrars. Because we have incorporated more companies than entire country. We have got so much industry happening here that we have more companies. Entire IT industry here. Entire automobile industry is here. So ancillary units are there. So we have more companies. So based on the density of companies, the registrars are there. So we have 1 registrar in Chennai and we have 1 more registrar in Coimbatore. Maharashtra has 1 registrar in Bombay, of course. Mumbai alone needs 1 full registrar. Density is very high now. If, let us say, rest of India, Mumbai will be 3 times. That is the density of Mumbai. So Mumbai has 1 registrar and Pune has another registrar, surprisingly. Not Nagpur. Nagpur is the second capital of Maharashtra. No, it has. Karnataka could have, but not. Bangalore seems to be the only. Belgaum doesn't have. Belgavi should have 1, but because you have Vidhan Sabha in Belgavi also, but no, only 1. Tamil Nadu has 1. West Bengal, come on. No, which industry will set up in West Bengal? Yeah, you tell me. You are lucky that there are companies still staying in West Bengal. In fact, West Bengal should have become the hub of Indian industry. You know why? Because when the British came to India, the first settlement was in Kolkata. The first High Court is Kolkata High Court. Okay? One of the fantastic states. Then only Madras Presidency came. Kolkata Presidency is the first. Then only Madras Presidency. Then Mumbai Presidency. Lastly, we had Delhi. After 1857, when Bahadur Shah Zafar was hit and sent to Burma, then the Luthians came there and you constructed your Connaught Place and you made that your capital. And that became the capital of India. Okay? Correct. M.A. Aslam, the first correct answer. Thank you. Good. Maharashtra. Yeah, West Bengal unfortunately lost the race long ago for many reasons. No. Petladwala Kohijema, I don't know. Company incorporated, sir, company incorporated only under the Companies Act 2013 or earlier law, which is 56 law or earlier law, not under any of the law you are mentioning. IRDA, RBI, no. Once the company is incorporated under the Companies Act, they will have control over it. IRDA will have control over it. RBI will have control over it. Okay? Like that. Only one sin issued by the Ministry of Corporate Affairs under the Companies Act 2013. Are you clear, sir? Okay. No other incorporation. East India Company was not incorporated under any law. Okay. East India Company, I think we'll see that a little later. Yes. The English East India Company was chartered on 31/12/1600, making it the first East India Company. See, understand, charter was given not by the Parliament of England, but by the then Queen of England. I'm sorry, the then King of England. At that time, it was a king, before Victoria. King. The then King of England gave them the charter in 31/12/1600. They became the first East India Company. Okay? It was not incorporated in any law. When this company was incorporated, there was no company law. Companies Act in England came later. Okay, it came later. When this company was chartered. Okay. Now to answer the question of Petladwala, there are companies which are formed by an act of parliament in India. For example, the Life Insurance Corporation, Indian Oil Corporation. Okay. All these entities were formed under separate laws, the Life Insurance Act and all. But once the Parliament decided to privatize them, once we decided to disinvest, they got themselves registered under the Companies Act 2013 by a special GO, which means LIC is now a company, not incorporated under the Companies Act, but it is coming within the purview of the Companies Act. Okay, same thing happened for Indian Oil Corporation. All these corporations became companies, but governed by the Companies Act 2013. They were not incorporated under this law, but Act of Parliament, disinvestment, they decided to come under the purview of Companies Act. Okay, that's all. So this is how it is. Of course, just for some little bit of history, the first company to issue shares traded on a recognized stock exchange was the VOC. If you want the full expansion, go to the Google and see. You can't pronounce it. It is obviously in Dutch. Okay, Netherlands, Dutch. So the Dutch East India Company was the first company to issue shares which were publicly traded. 1602, the Amsterdam Stock Exchange was the first ever stock exchange. The London Stock Exchange came later. Okay, but the most successful East India Company was no doubt the English East India Company, our masters. For 200 years, they were our lord and masters, and we were ruled by them. Then in 1857 by Queen Victoria. Till then, the company was sort of controlling us, and that is the first. In fact, the first ever company is the English East India Company. Okay, the British East India Company. English East India Company was the first ever company. Before that, there are some companies, but no record. First ever record is only for a English East India Company, 1600. But the Dutch East India Company was actually more successful. Because they were more successful, our friends, the British, they stopped, they did not bother. They destroyed them by fighting. See, politically, they destroyed the Dutch. And the Dutch were not good at fighting. So they were good, they were traders. So they said, "Chalo, you take over India, boss, and we will stay in some small parts of that country." So you still have some small Dutch settlements in some small parts of India, rarely. If you go to Malaysia, if you go to a place called Malacca, you will find a huge Dutch settlement there. Malacca, almost like Amsterdam. If you go to Amsterdam, you will see similar, you will see in Malacca, in Malaysia. Good. Moving on. Now, I'm giving some definitional sections in some other order. Please note, I'm jumping. But don't worry, all the sections are covered, which is why some of you trying to follow me with the Institute Ka material may find it a little difficult. Don't do that. But remember, 2 subsection 22 will come after 2 21, but I'm doing it in the reverse order. Okay. So why? Because to help you understand. Now, correct. I told you, it's going to be very difficult to pronounce VOC. I'm not even going to attempt it. Right. Now, we said that the liability of members of a company is limited. I repeat, the limitation of liability is only for the members, not for the company. Company has to pay as much as it owes. OWS owes. Whatever is due, company has to pay fully. So the minute you say limited liability company, it doesn't mean that I can't pay you more than this. No. The assets are there. Everybody should be paid in full. But liability of the members is limited. It means they have to pay only so much. How much is it limited? Depends on whether it's a company limited by shares or a company limited by guarantee or an unlimited liability company. So company limited by shares. The liability of its members is limited by the Memorandum of Association. MOA means Memorandum of Association. Memorandum of Association. Okay. So the Memorandum of Association limits the liability of its members to the amount, if any, unpaid on the shares respectively held by them. Okay. The amount, if any, unpaid on the shares respectively held by them. So the liability of the members is limited to the amount, if any, unpaid on the shares held by them. That is one type of liability. Another is where the company does not have share capital, then the liability of its members is limited by the memorandum to such amount as the members may respectively agree or undertake to contribute to the assets of the company. See, in case the company is being wound up, they will promise to pay a certain amount. That amount is called guarantee. At the time of incorporation, they will not pay anything. Nothing. No shares, nothing. But they will form the company. The company will possibly take donations and all, like a Section 8 company, or not-for-profit company. In case the company is wound up, then whatever amount is stated in the memorandum as the guaranteed amount, each man has to pay, not more than that. That is called company limited by guarantee. Okay. Unlimited companies are also there. Unlimited liability companies are also there. Means there is no liability limit on the liability of its members. Some firms, will want to come under this category and become unlimited company because even an unregistered company like a firm can be wound up under the Companies Act. Therefore, they will try to come here and they will be called unlimited company. Nobody can, if you forming an unlimited company, nobody will become shareholder. If you see, imagine you are asking people to give you money. You are saying your liability is unlimited. You'll have to pay whatever is due. Then who will become member? So no, there are not many unlimited companies. Then nothing rare. Who will become? So don't waste your time wondering who will form unlimited companies or is there any unlimited company? Don't worry. But it is there. The Act it is there. Okay. Yeah. Yes, it is possible to have a company which is both limited by shares as well as guarantee. In that case, we call it as company limited by guarantee having share capital. That's how this company will be called company limited by guarantee having share capital. Company limited by guarantee not having share capital. Got it? You will be seeing when you come to memorandum now, there are different formats for memorandum. Mainly the association class or the subscription class now. It will be different. Otherwise, everything will be the same, but the subscription class will be different for different types of companies. Companies limited by shares, company limited by guarantee, having share capital, company limited by guarantee, not having share capital, unlimited liability company, having share capital, not having share capital. So many different types are there. Okay. Beautiful. This is a very practical we got ultra wires in CF. Maybe here also we might touch upon it, but not too deep. Doctrines will be taught, but not too deep. There's a little overlap between foundation and intermediate. I do agree. See, we have to lay the foundation now. That's right. I am reminded of a story from Zen story, from a Zen master story, Zen story. This is one of the famous Zen stories. There are two famous Zen stories. This is one of them where I will explain to you, Sri Lakshmi. I'll just tell my Zen story and then explain. There was a Zen student, or rather a Zen person who had learnt Zen Buddhism. He had controlled himself. He could do many things with Zen. Such, I know, yaar. Hey, I know, yaar. It was already taught in foundation, yaar. I know it. Like that. So, this man goes to another master who says he's supposed to know a little more on Zen. So that guy says, Zen master says, don't worry, let us not bother about what I know and all. I know nothing. I'm zero. Let's not bother about all that. Have a cup of tea. Let's have a cup of tea. So they bring a bowl. Tea is made. It's an important ceremony in China where you make tea and then you filter it, hot tea, and then you pour it. And the master started pouring. So the guy who had come, he was holding the cup. Master pouring. Then the cup is full and then the cup starts overflowing. At that time, the guy who had come, will not call him student because they are all very highly knowledgeable people. Who can be? I am a student always, but others know everything. How can you be student? Okay, so pouring. So, hey, what sort of man you are? The cup is full, you are still pouring. The master says, that is exactly the problem, my dear friend. Your cup is already full. Empty the cup, I'll give you more knowledge. Okay, so a brilliant student is one who continuously empties the cup for new learning. Okay, so knowing, not knowing. Using, not using. That is more important. Okay, don't worry. If you know, learn again. What is there? So, coming to the point, Sri Lakshmi ka question I want to answer first. Company limited by shares means share capital is fixed. Correct. In a short while, you will come to share capital. Company limited by share means it has share capital. It has authorized capital. In the memorandum, you will mention what is the authorized capital. That is company limited by shares. So, there could be a company where people are agreeing to contribute in the event of winding up. Plus, they will also be authorized capital. So the company will have capital clause, it will have authorized capital, and also in the subscription clause, they will agree to give guarantee also. So both, or pure guarantee, where there is no share capital. So if the company has capital clause, it means having share capital. If the company has no capital clause, then only guarantee, then company not having share capital. But your company should be limited by guarantee or by shares. It can't be nothing. So, but there is a possibility that a company limited by guarantee or an unlimited company can have share capital. Got it? So that is why we don't use the word company limited by shares and by guarantee. No, we say company limited by guarantee having share capital. Company limited by guarantee not having share capital. Because later on when you come to memorandum, I will tell you that there are many clauses. 6 clauses are there. Name, situation, domicile, situation clause, then capital clause. Such a clause will not be there for a company pure limited by guarantee, no share capital. But if it is having share capital, capital clause will also be there. There will be some capital also. Authorized capital will be there. That can be subscribed, issued, allotted, etc. etc. I will be explaining very shortly what is authorized capital. Give me time, it will come. It will come in 2 minutes. Just give me time, I'll tell you. Yeah. Now, during May 2020, during the peak of the pandemic, Reliance Industries Limited, this is a real example. Reliance Industries Limited offered whatever, okay, 42 crore, 26 lakhs, 26,894 normal equity shares, means equity shares. Why the word normal? When you come to share capital, I will tell you. Or incorporation of company, I will tell you. When I talk about shares, we will tell you. Company with differential voting rights, normal. So this is normal equity shares of rupees 10 each at a price of 1,257. What is the face value? 10 rupees. 1,247 is premium. 10 rupees price, 1,247 premium. Now this amount was payable in 3 installments. 314.25, 314.25, 628.5. Partly paid shares. Now, Mr. Deepak applied for, these were right shares. Later on, I'll tell you what is rights also. Whatever it is, they offered the shares to their existing shareholders. So on some basis, for example, every 16 shares, if you are holding, for every 16 shares, you'll get 1 share. For every 16 shares, they'll give you 1 share. Okay? Like that. They gave. Now, Mr. Deepak applied and was allotted 100 shares. He paid the amount due. What is his liability? As on 30th April 2021, that is the next year. Next year. May 21 only, that next call, which never came. They have not made the call, still partly paid. So, 30th April 2021. What is the liability? Obviously, it is 314.25 plus 628.5. The amount, if any, unpaid on the share is the amount due. Okay? The amount, if any, unpaid is the amount due. Okay? Got it? So the liability of the members is limited to the amount, if any, unpaid on the share. Okay? So fully paid shares, no liability. Fully paid up shares, no liability. Okay? Great. Absolutely correct. See, for a sole proprietor, capital is a balancing item. What do you mean? All the assets minus liability. If you're following double entry system, trial balance will tally. Balance sheet will tally. But basically, it's a balancing item. It is excess of assets or liabilities. A sole trader can always withdraw the capital from the business fully. Even negative capital is possible. Even for partnership, it is possible. Why? Even if the balance sheet capital is negative, the creditors are not restricted to that capital or those assets. They can attach the personal assets also. That is why unlimited liability, sole proprietor unlimited liability. That is why the capital of a sole proprietor is not fixed. Partnership also, it is not fixed. You can divide, you can say this is fixed capital, that is floating capital now. But basically, a partner can draw everything. He can even draw more than his capital. But still the creditors can go to his personal assets. But in the case of a company, it is not possible. If you have invested so much in that company and there is no due, that is all, no liability. And the amount that you hold in that company is a fixed number. Correct? So, this concept of unlimited liability changes totally when it comes to company. The liability of the members of the company is limited, which means what? The creditors of the company cannot attach personal assets of members. Therefore, the share capital of a company has to be a fixed amount. It cannot be withdrawn by a member. It should be shown continuously fixed amount. Okay? Of course, the reserves and surplus will keep moving. The profit will be added to the P&L account, transferred to general reserve. That will be moving. But the capital should be a fixed number. This is called share capital. The capital of the company is called share capital. This share capital is divided into smaller units called shares. Okay? So the word share is defined as share means a share in the share capital of a company and includes stock. Okay? So share means a share in the share capital of a company. Right? Now, so, and it includes stock. Sunilji, about right shares, we'll talk in more detail later. Don't go there now. I will teach you. Don't worry. Right shares, principles, law is there. I will teach you. You are right. They can renounce, etc., etc. But this is not the time. I will teach you later. See, the problem with definitional section is we will have to talk a little bit about those things, but don't go there and we'll talk about it. Don't worry. I appreciate your knowledge. You are a really knowledgeable man. And when the time comes, whatever little more knowledge I can add, keep your cup a little empty. I will pour something in that. Okay. Yes, you have read about it in accounts and all. Correct. Now, when shares are traded in stock market, then how will the buyer know that it's fully paid? Sir, actually, you will check out one of the important conditions for listing itself is it should be fully paid share, fully paid. But Reliance is an exception, partly paid share being traded on a stock exchange. Reliance is an exception. The partly paid shares are being traded on a stock exchange. How will you know the difference? You go to moneycontrol.com. You put Reliance Industries Limited, you'll get two listings. One for the fully paid share and the other for the partly paid share. That's a partly paid. They'll be clearly indicated that it is partly paid. Yeah. What is the difference between shares and stock? Yes, I will have to explain that. And somebody has put something in a language that I cannot understand. I don't know. Okay, so I'm unable to understand what he has put. He has to put it in English because what is sauce for the goose is sauce for the gander also. So I cannot, just as I cannot understand Hindi, I am not able to understand this language also. Okay. No. Stock is not inventory. Accounts, income tax, and audit plans are completed. Okay. Why are you giving this information to me? I mean, thank you for that. But what am I to do with this knowledge? It is completed. Good for you. What do you want me to do with that? Okay. What is stock? Okay. Let me explain what is stock before we go for a break. Small break. But before that, I will finish this slide. Okay. Stock means stock is a concept. See, in some of the more matured markets like America, Europe and all, the volume of trading is very high. So there, instead of buying and selling shares, what they do, they combine shares into lots and call it as stock. For example, instead of buying and selling one share, they will combine 100 shares. And that 100 shares will become one unit of stock. So in the market, instead of selling 100 share, they will sell one stock. So buying and selling lots, become convenient, easy to buy and sell on the market, in the stock market. So that is why they convert it into stock. And then the stocks are held and sold. But in India, though the concept of stock is included here, no company has issued any stock or has converted shares into stock, etc., etc. So basically, stock is a set of shares put together for the purpose of easy trading. Okay. Yeah. Break will be there, but not too long. Only 5 minutes because coverage is there. I have only 2.5 hours to cover. So break will be there. 5 minutes ka break. Now the time is 7:35. We have a break till 7:40. You go for your biology break, whatever, 5 minutes. Come back. Okay. Welcome back from your well-deserved break. Somebody wanted me to explain this May 2020 example again. Point is, forget about this rights part. Ignore it. I will teach you rights later. What you need to understand is Reliance Industries Limited issued partly paid shares. Means out of this 10 rupees plus 1,247, total 1,257, it was divided into 25%, 25% and 50%, which means 25% only was paid on application, balance 75% is still due, which means the liability of a shareholder of Reliance Industries Limited, liability of the liability of a person who is owning shares, partly paid shares of Reliance, is only that 75%. Okay, whereas for a guy like me who's owning fully paid shares in Reliance, completely fully paid, no liability. But for Deepak, who has applied the partly paid shares, to the extent that he is yet to pay, there is a liability. Okay, that is the liability of Mr. Deepak. So I'm trying to show you that the liability of the members of a company limited by share is limited to the amount, if any, unpaid on the shares held by them. Okay, how did Reliance get partly paid shares listed? Public interest, yeah. So many people are willing to buy. Interest is there. Therefore, SEBI said, please go on and list the partly paid share. Every time it's a question. See, Reliance is, it's a fantastic company. Believe me, no shareholder of Reliance will be angry with Reliance. Okay, only people who will be angry with Reliance are those who sold the share. Because subsequently went up, they will get angry. But other than that, people will blame Dhirubhai, people will say Ambanis are fraud, blah, blah, blah. But nobody has ever lost. No investor of Reliance has ever lost. They have made more money. They have huge money. Okay. I invested something like 25,000 rupees in Reliance in 2002. Today it is worth 30 lakhs. Can you imagine? And I'm still holding those shares, not sold it. I have crossed 2 cycles. Nothing has happened to Reliance. I never sold Reliance. Okay. I mean, I'm not trying to recommend. This is not a recommendation for any share. I'm not saying that Reliance is a good share. I'm not saying that buy the share. I am saying I did invest in 2002. Today, I'm having that lakhs. That's all I'm saying. I'm not saying Reliance, invest in Reliance like that, please. Today, it's 2,700. Not a good price. I'm not recommending. But if the market falls and some fools say that market is gone, everything is gone, Corona, again we have got Corona, blah, some nonsense, the market dips and you find Reliance going at 1,700, 1,500 and all. Boss, if you don't buy it, who's to be blamed? You tell me. Okay. Now, coming to the point, share certificate, I will deal with it. Share certificate will be dealt with in another topic. At that time, I'll give more detail. Right now, let's leave it and go. Yes, lot of shares is called stock, correct. Stock becomes shares when they are, no. Stock, see, shares are issued, then consolidated to make blocks of 100 each. That block is called stock. For the record, no company in India has issued stock. Zero. Concept is there in the act, that is all. Reality, practically no. Mohammed ji, just 5 minutes break we'll have to give. Okay, please. Not everybody is like you. Even I need little bit rest now for my throat. Suprasad, you are trying to pull my mother tongue. I will not speak in my mother tongue. I have decided not to speak this session. Maybe next session I will speak, but not in this session. Not one word of my mother tongue will come from my mouth. Okay. Thank you for the compliment, of course. Okay. Correct. Till the call is made, no liability. See, one more beauty now. You have already studied all this in +2 itself in a way, because you studied it for the purpose of accounting for share capital. That is why for some of you it will be known, it will be like that. Okay. So this share capital of a company is again, in the way in which it is displayed now, it will be shown in separate categories. In fact, these are all defined in the Act. That is why I'm giving it here. See, 2 subsection 8 defines authorized capital. It's also known as nominal capital. This is the maximum amount of share capital of the company. This is mentioned in the memorandum in the capital class. This is mentioned in the memorandum in the capital class. Issued capital means out of that authorized capital, the company will announce that they are willing to give those shares to the public or to other shareholders. That is called issued. For subscription, it is issued. So the company will give a prospectus saying, we are keeping these shares available for you. Apply. If you want to apply, apply. When we come to the topic of prospectus, I will tell you more detail about application, prospectus, etc., etc. Okay. Subscribe capital. So the company has offered these shares, or rather made these shares available for subscription, and the public or other people have sent application. So that is called subscription. When the applications are received from the people, whether in public issue or private placement, that is called subscription. So that is called subscribed capital. Then if the amount is entirely paid, then it is straight away paid up capital. But suppose it is partly paid, like our Reliance share, then to the extent call has been made, it is called called up capital. To the extent calls have not been made, it is called uncalled capital. So Reliance may uncalled capital, 314.25 plus 628.5 is uncalled capital, whereas 314.25 is authorized, issued, subscribed, am I correct? Called up and paid up. 314.25. Balance amount, right, is authorized, issued, subscribed, uncalled, and therefore not paid up. So in the balance sheet, only 314.25 will come. Uncalled capital will not be shown, but it will be shown in information relating to share capital. It will be given as a note. Separate note will be there regarding this. Okay. That is not, it is nobody's, it is a contingent liability. For who? For the shareholder, it is a contingent liability. Means the applicant, it is a contingent liability. When the call is made, he'll have to pay. But for the company, it is only information. So much is still uncalled, like that. It will be information. You have to give that information. So much still remains to be called up, like that. Registered capital. Yeah, registered capital also, but the definition doesn't use the word registered capital. Yes, when authorized capital needs to be increased, can we amend? All that is a subject I will teach. It so happens I will be teaching. When you come to incorporation of companies, this question will be answered. How to increase authorized capital? That means you have to amend the capital class. How to do that will be answered in that topic. Okay? Yeah, chapter 3, chapter 4, like that. This is chapter 2, chapter 3, chapter 4. If company issues bonus shares and total shares authorized, then what will be the... No, you cannot do that. You have to first increase the authorized capital, then only you can allot bonus shares, Baba. You cannot allot more shares than the authorized capital. So, if you come to me, I will immediately say, please don't do this. There is no consequence. It means you are violating the law straight away. You are violating the law. Your memorandum should have amended. You have not done it. So, please don't even do that. Okay, so you have to just... First increase your authorized capital, then only allot bonus shares. Okay? Can you put the cart before the donkey? You have to put the donkey before the cart. So increase the authorized capital, then only you can allot the bonus shares. So this question, there is no question of answering it. What will be the consequences? It is like you cannot do it, yeah. You cannot, see boss, it cannot be done. Okay, it can be done, but it is foolish. Don't do it. If you do that, your boss, the audit itself will be gone, yeah. I am the auditor, I will come and see, we will issue bonus share. Paid up capital will be more than authorized capital. I will qualify. Or I will say, Baba, cancel it. Go increase your authorized capital, come back, and then you allot your bonus shares. I mean, it will not be done. It's so silly. No, there is no question of consequence. No. Hopefully, you will also become a member, then you will understand it. Oh, you won't even do this. Okay? Increase them. Think about it. How can the paid up capital be more than the authorized capital? Think like that, you will understand. When you allot bonus shares, your paid up capital will go up. Okay, I'll put it this way. Mr. Petradwala, rule. Paid up capital cannot be more than authorized capital. Therefore, if I want to increase the paid up capital by allotment or issue of bonus shares or whatever method, I have to first increase my authorized capital. Can you understand this? Great. So, ABC Limited was registered with registrar with an authorized capital of, which is that? 2 crore, where each share is of rupees 10. So, 20 lakh shares of rupees 10 each. Then the company issued advertisements to public, to people. Okay. They have received a 10 lakh shares application as against 7 lakh actually issued. So total authorized capital 20 lakh shares. Out of that, they issued only 7 lakh, but they got application for 10 lakh. This is called oversubscription. You already know this. And so the balance 3 lakh shares ka money na, it should be returned back. Only 7 lakh you can retain it. Means now the amount called up as of date is 8 rupees. Means 7 lakh shares into 8 rupees, 56 lakhs. So 56 lakhs is the amount which should be shown as paid up capital, called up and paid up. Balance 2 rupees into 7, 14 lakhs is yet to be called up. Yet to be called up. Right, sir? So total 70, out of that only 56 has come. Balance is not yet called up. But unfortunately, all the dues have been paid in full except for 3 fellows who still owe the final call money of rupees 2. Out of this 8 bucks, they are yet to give 2 rupees on 6,000 shares. How will this be shown? Just for knowledge. You are all expert in accountancy. I am no way near you in accounting. I am zero in accounting. This is only to explain the company law concept. I am teaching this. Okay. So authorized capital 20 lakh shares into 10, 2 crore. This is in the memorandum upper limit. Issued capital, not 10 lakhs. 10 lakh is what they got the money for. 7 lakh is what they offered. So that is 7 lakh into 10, 70. Subscribed 7 because out of the 10, 7 is can be taken. The 3 only have to give back. So 7 into 10, 70. Called up is 7 into 8, 56 lakhs. Now technically this should be paid up. Technically this should be paid up. 56 should be there. But unfortunately those 3 donkeys, they have not paid me 6,000 into 2, 12,000 rupees. They have not paid me now. This is called, you know it already. I'm only giving you input. You know it already. It is called calls in arrears. Calls in arrears. So the calls in arrears should be shown as a reduction under the head share capital, paid up capital 56 lakhs, less calls in arrears 12,000, balance 55 lakh 88,000 to the inner column. That is the total. Okay. So correct. Beautiful, beautiful, beautiful. Ultra-wise only. Sir, please, methodology, now itself you understand. In this table, the last line cannot be more than the first line. Okay. When you allot bonus share, what will happen? Money won't come in, but the paid up capital will go up. If the paid up capital has to go up, others capital should also go up. For that, there is a procedure, as he said, SR and all that he has put. What is SR? We'll come to that later. Okay. Okay. Now, kinds of companies, quickly. There are different, like we have public company, private company, holding company, subsidiary company, all that we have to know. See, small company, like that, some definitions are there. Subscribed capital is 1 crore. No, madam. That is where, see, how many, what is the issued capital? 7 lakhs. So, subscribed is also only 7 lakhs, right? It so happens they received for 10 lakh shares. You got it? But they have to return. They have to return the money. 3 lakh shares they cannot allot. Only shares which are issued can be allotted. Okay. So that is only 7 lakh. You are making that mistake of taking issued capital as 10 and subscribed as 10. Subscribed is not 10. Subscribed is only 7. Excess application is for 10 lakh, 3 lakh shares. That should be returned back to the subscribers. Okay. Muhammad Aslam says there are 12 types of companies. I don't know whether I'll cover all the 12, but whatever I cover is what I can cover. But okay, Aslam, don't waste your time now, but later on you give what are the 12 types. Or if you have a list of companies, you tick. And in case anything is left out, you tell me, I will explain it. If at all needed. If it's not in the syllabus, I won't. This Telegram group, etc., I'm very happy to know that such a Telegram group is there. I bless that group and I wish them well, but don't include my name ever. In my number is not with you. I will never give it. These groups and all are strangle. Never I will join that group. If you have any doubt, you send it to the institute. The correct procedure is any student can send a query to the institute. There is a query in the portal. You can write. There are excellent faculty in the Board of Studies. They will receive the query. Wherever possible, they will give the reply. Where the question needs additional input from faculty like me, they will send it to me or discuss it with me. Based on that, you will get your reply. This is the procedure for clarifying doubts. You are entitled to ask either during the class like this in the query sheet, or you can send the query to the institute. They will answer it. Okay. I mean, either they will answer or they will pass it to me. I will give the answer. They will give it to you. Okay. This is the procedure for clarification of doubts beyond the class. Outside of the class, when you are preparing or controversially you feel this is not right, that is right, this is wrong, that is wrong, please send it. It will come to them. It will come to me. Okay. Earlier, I used to share my number and I used to ask students to ask me doubts and all. Fantastically, they used to ask me doubts and all that, but sometimes very silly doubts also used to come. And sometimes argumentatively they will write because they don't know how to write English. Now they will forget that they are writing to a 57-year-old man with a 35 years of experience. When you are writing to such a person, if I am writing to a man who is 25 years my senior, there is a language that I will use. Which language, if you can use, it will be nice. Not only with me, with everybody. Seniors, you have to give a lot of respect while, especially in email and messaging, because sometimes the language will be very rude. Okay, be careful. The more respectful language you use, the better you will be considered as a person. Your self-image, your image, public image will go up. That is all. See, there is a Hindi, which is spoken everywhere in the country, Bihar, everywhere. There is a Hindi which is spoken in Lucknow, in Prayagraj, Allahabad, Old Allahabad. See, Awadhi, which is one of the beautiful versions of Persian mixed Hindi, It is a beautiful language. So like that, when you use such language, you will be seen as a learned person. You will be seen as a respected person. It is up to you to use. Chalo, public. So first is example, public limited company. Yeah, please. It is a good idea. There is a Telegram group which you can join, or I don't know how you will bring people into it. Please enjoy, have Telegram group and all. Okay. If out of that Telegram group some doubt is coming which you still need further input, send it to the institute. We will answer it for you. Okay. If we want to connect with you on LinkedIn, I'll answer this question later. Right now, let's finish. If you have my mobile number, please keep it safely. Don't give it to anybody. Yeah, I'm happy that you're using the respectful English. Nothing wrong. If you use respectful language, like, it will be, it's a, see, mujhe do na, like, give it to me, like that, you say, or dijiye. Slight difference. Okay, there is a Telegram group for this batch. I don't know if it's official. I can't do it without official. If it is not official, I cannot announce it here. Sorry. I will check up with the Board of Studies and then I will announce it. Sure. I will announce it in the next class after checking up with the Board of Studies. Please, you don't mistake me, because the Board of Studies is very strict on these things. If they are willing to authorize it, I will definitely tell them. I will announce it. Oh, how is your mother tongue? Beautiful. Thank you. That is great. Okay. I have a friend who can speak Awadhi, but he is not from your part of the country. He is from another part of the country, but speaks very beautiful. Bihar is also good. No, I'm not saying Bihar. I'm saying the way Hindi is spoken in various other places, including Bihar. Bihari is also good. Okay, Bihari is a beautiful language. I have a friend in Gaya who is a Bihari poet, not Hindi, Bihari, and I used to tell poems in my mother tongue, and he used to tell poems in Bihari. Beautiful language. It's a beautiful language, and very poetically used to give shairis like that in Bihari, not in Hindi. So every language is good. Don't Amit Kumar ji, maaf kar dijiye. Forget it. Huh? Good. Now moving on. Public. Okay, chalo. Let's enough on languages. Public limited company means a public company is a residual concept. They have not defined public company. Public company means a company which is not a private company. Got it? A public company means a company which is not a private company. It has a minimum paid up share capital as may be prescribed. As of now, they have not prescribed any minimum paid up share capital for either public or private company. But they are retaining the power. They may prescribe minimum paid up share capital. As of now, there is no minimum paid up share capital. So basically, public company means a company which is not a private company. Okay? Be careful. A company which is a subsidiary of a company not being a private company shall be deemed to be a public company for the purpose of this act, even where such subsidiary company continues to be a private company in its articles. Later on, you will see that private company by its articles will contain certain restrictions and all. Even though these are there, still, if it is a subsidiary of a company which is not a private company, that is subsidiary of a public company, it shall be deemed to be a public company. So what is my understanding? A private company which is a subsidiary of a public company loses the character of private company, it shall be deemed to be a public company. Even though it continues to have restrictions, etc., etc., application of law will apply as if it is a public company. The privileges of private company will not be there. See, now the privileges of private company are very less. In those days, many sections will not apply to private company. Today, many sections apply to private company. But still, for private companies, especially startup private companies, they have given some exemption. These exemptions will not be available to a company which is a subsidiary of a company which is not a private company. Okay? So, for example, A Private Limited is a subsidiary of AB Limited. See, private limited company will have in its name the word private, whereas public limited company will not have anything. It will have only the word limited. The word private will not be there. Public will not be there. Only AB Limited. So if you don't see the word private in the name of a company, it is a public company. Okay. Whereas if the word private is there, it is a private company. So A Private Limited is a subsidiary of AB Limited, a public company incorporated under the Companies Act 2013. A Private Limited wants to avail the exemptions available to private company. Can it do so? So AB Limited is the holding company. A is the subsidiary. Whether it can claim A Private Limited is a subsidiary of AB Limited, which is a public company. Therefore, A will be deemed to be a public company and cannot avail the exemption, right? So, residual means, it's a good question. I will explain in a different way. There is a definition of company. All companies incorporated in India under this act or earlier act are company. Now, that is the universal set. Do you remember your Boolean? Do you remember your set theory? In school you read, na? One rectangle you put a rectangle and put U and then line in between. That is universal set. In that universal set, we are going to define one circle. We are going to call it private company. I'm going to define it later. In the next slide, I'm going to define it. So any company which strictly satisfies those 3-5 conditions will get into this smaller circle, which is private limited. Anything which is not fitting into that circle, now residual, outside in the universe, that is called public limited. So if it fits in the definition, it comes into this, it is private. Anything which is not there will go outside. In addition to that, we are bringing one more guy there, which is a private company, which is a subsidiary of public company also will go out. And we are keeping that as a separate group. That is also a public limited company deemed to be like that we are saying. Okay. So residual means that which does not fit a definition will be automatically become part of the bigger universe, which is not part of this set. And it will be covered. Okay. So that means the entire universe is divided into two. One is private company, defined. Anything which is not a private company, public company. Got it? Correct. That is what I said. If a public company is a subsidiary of private company, then the subsidiary... No. Vedrad Varaji, you should not do like this. No. Did I say that? Okay. Private company, if it is a subsidiary of public company, will be deemed to be public company. That is all we said. Inverse, I have not told, it is not there. Okay. Got it? Don't do this. I mean, do it, but no, that is not correct. Read this clearly. What does it say? A company which is a subsidiary of a company, not being a private company, shall be deemed to be public company. See, public company can have private company as subsidiary or public as subsidiary. Public is a subsidiary, automatically it is public company. Private is a subsidiary, then that will be deemed to be public company. But ulta, if you try, no. AB Limited will continue to be public. A will become private. A will continue to be private. Your real question should be, if A Private Limited is a holding company of a public company, will it become public company? No. It will continue to be a private company, enjoy the privileges, but AB Limited will be a public company. There are like that many cases where the holding company is private, whereas the subsidiary will be public. Nothing wrong in that. Okay, good. Good question. I'm at last enjoying these. Now only the questions have started coming. Okay. Now, whereas now we are defining private company. Private company means a company having minimum paid up share capital as may be prescribed, no prescription, and which by its articles provides for 3 matters. So in the articles of association, there will be 3 matters. What are they? A private company shall by its articles restrict the right to transfer its shares. Okay. No. Is it joking, Vedradwala? See, you are asking a question. I was reacting to it in my usual way. Sometimes I'll talk like this only. Don't get tensed by the way I reacted to your question. But I was thinking, see how students are thinking. Huh? Wow. And I also want you to concentrate on what I'm putting on the screen. Once you read it clearly, then you will not have any major doubts. Why? Because, now I am doing guided reading. I am guiding you through the reading. Later on, you will be reading without guide. At that time, your mind should be concentrating. That is what. Yeah, Tata Sons Private Limited, absolutely. You have given a beautiful example. Should a private limited change its name to A Limited? No need. That's what they are saying. Even though it continues to be a private company in its articles, still, for the purpose of application of the law, it will not enjoy the exemptions available to a company. Because, see, tomorrow it may cease to be a subsidiary. At which time, again, it cannot change its name and all. As far as the application of the law is concerned, to a subsidiary of a public company, the private company status will be denied. The exemptions will not be available. The law will apply to it as if it is a public company. That is why they say shall be deemed to be. So it will continue to have private limited, etc., but it will be deemed to be a public company. It will be treated as if it is a. Yeah, see, ultimate holding company is public. Then subsidiary and its layers will be deemed. It will be so, but Aslam, you are jumping the gun. Unless I define subsidiary company, your answer will not be complete. Your statement is correct, but don't jump the gun. How this second layer subsidiary will become a public company will come later. I'll tell you. Only if you understand subsidiary, you will understand this. Just wait for that. Before that, let us see what is the private company. But your point is well taken. When I come to subsidiary, I will again tell this and I will explain. A private company shall by its articles restrict the right to transfer its shares. So, normally in a public company, you can transfer the shares to anybody. No need for any permission, blah, blah. You can just go sell and go. The shares are freely transferable. But private company, there is a restriction. You cannot, if you want to sell the share, first you have to offer it to the existing shareholders. If the existing shareholders are not willing or able to buy, only then you can go to the outsider. That is called restriction on the right to transfer its shares. Then it limits the number of its members, except OPC. In the case of one-person company, one-person company can have only one member. Okay, so automatic limiting is there. OPC means one-person company, only one, sirf ek. Whereas any other company other than OPC will limit the number of its members to 200. So there is a ceiling on the number of members of a private company. By its articles, it will limit the number of its members to 200. While counting this 200, joint shareholders shall be treated as a single member. If, for example, Mr. and Mrs. A are holding shares jointly, then one share they are holding jointly, that will be treated as one member, not as two members. So joint shareholders shall be treated as single member. Number 2, the above limit of 200 members shall not include, very, very important, concentrate. I will answer these questions a little later. Okay, the above limit of 200 members shall not include employees. So any shareholders who are employees, not to be included. Former employees who were members of the company while in that employment and have continued to be members after the employment ceased. So think about it. I am a shareholder and an employee, no problem. I am not an employee, but I am a shareholder, former employee. But these shares were allotted or these shares were acquired by me when I was employment, who were members of the company while in the employment and have continued to be members after the employment ceased. Only. Simple example. A was employed by the company. At that time, he was not a shareholder member. He quit. Then he bought shares of the company. Can he be included in former employee? No, because he is a former employee, but he was not a member of the company while in that employment. Okay. Another person, B. He was a member, employee, member. Then he quit, continues to hold the share. He will be exempted in this category. And current employees who are members also will be exempted. Got it? So while counting 200, you should exclude employees and former employees who were members while in employment and have continued to be members after that. Only that category. If there is a guy who became a member after he ceased to be an employee, sorry, he will not be exempted. He will be included for counting 200. Right? Now, based on this, a small numerical problem, let us see if you can give an answer. No, it's there already. So, I will not. So we have Flora and Fauna Limited was registered as a public company. There are 230 members in the company as noted below. Directors and their relatives 50. Employees 15. Ex-employees. Shares were allotted when they were employees. Very important. 5 couples holding shares jointly in the name of husband and wife. Oh, husband and wife jointly. So 10, 5 into 2. Others 145. Now, I have to count now and see whether this company will exceed 200. Okay. So, what is the point? Employees and ex-employees who are allotted when they were in employment can be excluded. That is 25 to be excluded. So, 50 plus, can I take 10 or 5? Joint should be taken as 1. So, 10 will become 5. Joint shareholders 5 into 2 now, I take 1. So 5. So 50 plus 5 plus 145. Exactly 200. Therefore, no need to reduce the number, or you can convert this company. They want to convert this company into private company. Can they do that? Yes, why not? Because even after conversion, it will have only 200 members. There is no need for reduction in the number of members. Okay. Are you clear? Any doubt? You can ask me. Supradaji is asking this question. Sir, restrictions for private company are entrenchment provision. Madam, I don't know what is entrenchment provision. Sorry, that word entrenchment, not able to understand. I will do research and get back. I'm not able to understand the word entrenchment. Okay. So maybe, see, entrenchment, I've heard it somewhere else. This is not entrenchment provision. I think you are reading, you have already read incorporation, amendment of, I think you have read amendment something, memorandum and articles. There entrenchment is used. Don't worry. This is just a provision in the articles. That's all. Don't worry. When we will take up entrenchment as a concept later. At that time, I will explain it to you. Right now, don't confuse that with this. This is simple. In the articles of a private company, these 3 matters should be provided. That is all. Okay. Don't worry. Entrenchment will come to later. It's too early now. When I come to amendment of articles, I'll talk about that. Okay. I know what you're talking about. Right now, if I want to explain it, it will take a long time. I will be explaining at that time, clearly at that time. Okay. Don't worry about that. We can use will instead of shall. No. Shall means mandatory. Will actually is not shall. But sometimes we use will, but will is a future tense. Will is nothing to do with this. Okay. Company shall is the correct word. If you want it mandatory, then the word shall only should be used. Minimum limit is also 2. What is that? Not able to understand your question, Petladwalaji. Separate is a ceased includes intentionally means so as to private. Okay. Agreed. Madam, I will teach entrenchment later. You should know one thing. I have not written CA foundation. I wrote CA entrance. In 1985, I wrote CA entrance exam. I didn't write foundation. At that time, no entrenchment in my syllabus. Okay. I completed my CA when I was 21 years old. Okay. Don't worry, I will teach you. You give me time now, I will teach you. Here, I don't want to teach. It will come. Later, I will teach you, if you want. This is not entrenchment. Okay? Shall I answer that straight away? This is not entrenchment. This is a provision in the articles by which, if these provisions are there, it is a private company. Okay? That's all. Entrenchment is a concept by which you can make it, amendment can be made difficult. Amendment of the provision can be made difficult. That is called entrenchment. So it's a different concept, nothing to do here. That is all I'm trying to tell you. Okay? I will teach you. I will teach you, don't worry. Okay? This is not entrenchment. Okay, answer question. This is not entrenchment. That's all. Your question is answered. Okay. I don't teach CA foundation. That is why I don't know entrenchment. Yeah, it so happens I am also a member of the Institute of Companies Editors of India. For the record, I am an All India rank holder in Inter CA, Final CA, Inter CS, Final CS, All India 27, All India 38, All India 4th, All India 10th rank holder not only telling information. Rank holder means nothing great, no harm. I am still Buddha only. Some other people are more intelligent than me. I'm merely telling you that I'm a rank holder. That's all. And I'm also a company secretary, member of the Institute of Company Secretary. Yeah. I'm a Master of Science in Management Systems from the Birla Institute of Technology and Science, Pilani also. I'm an MSc in Psychology. I'm a Certified Information Systems Auditor. These are my qualifications. Okay. Ceases includes intentionally leaving also. Yeah, why not? After why not? Intentionally leaving also ceasing. After the employment ceased. You can quit. Company can check you out. Even ceases includes being chucked out also. Whatever it is. If he was a shareholder when he was an employee, continues to hold the share, he will not be counted for 200. Lastly, prohibits any invitation to the public to subscribe for any securities of the company. Prohibit any invitation. So, very, very important. This third clause is very important. A private company cannot invite public to subscribe for shares, securities. The minute they issue an invitation to public by way of prospectus, they are violating the law. Later on when you come to prospectus, I'll tell you. Only a public company can issue prospectus, inviting public to subscribe. Private company, no. Private company at best can only go for what is known as private placement. It can go for private placement. We'll see that. Okay. But it cannot go for public issue. This is the most important problem. So usually what we do now, when a client comes to us, he will start small now. We will make him a private company. He will work for 3 years or 4 years. He'll make good money, profit, get valuation. Around the third year, we will convert him into a public company. Convert. It's possible to convert. We'll see that in incorporation. Once we convert him into a public company, then 1 or 1.5 years later, we will go public and allot shares to the public. Okay. So private company cannot go for public issue. Many people, they come to me, they say, I want to form an LLP. Now what I will do is, because earlier LLP, but now I permit them to go for LLP. But at some stage, I have to convert that LLP into a private limited company or a public limited company. And then only I can go for shares, issue of shares, investment. So generally I ask them, boss, are you going to fund it by your own capital or are you going to look for some kind of investment from other parties? No, we'll be going for funding. Then better go for private company, Up to 200, I mean, you'll be seeing private placement, you can go. Then you can convert to public company, go to the public. So if you want to access more capital, better become a company. No. This is only a family-owned business, Mr. Shrikant. We just want to have limited liability. Then go for limited liability partnership. No problem. This is how you have to choose the organization structure also. Private company member can transfer shares to the existing member, no problem. Other than existing member, he cannot transfer. If he wants to transfer, then he has to first offer it to the existing members. Then they will be given, as per the articles, usually 15 days time. Then within 15 days, they do not accept it. Then he can go for sale. In one case, I did it. One building was there. The company owned a building. The owners wanted to sell the company. There was 30% stakeholder, 15% stakeholder was there. It's creating problem. So we had a valuation done. Then we valued the share. We gave another 300 rupees extra so that to sweeten the deal. We sent an offer letter to that person. He did not respond. Therefore, after 15 days, we immediately went for sale to a third party. The entire shares were sold. And this 15% fellow, I said, I'm going to sell it to that other person. You have not accepted it. Then they handled that 15% wala. Finally, whatever offer was made, he could have taken. He didn't get it. So that is all. So before going, we have to strictly make an offer to the existing shareholder. If they do not buy, then we can go to any other person. Okay, good. Holding company, subsidiary company, I will try to cover today. With that, we will sort of stop. Holding company in relation to one or more other companies means a company of which such companies are subsidiary companies. Means what? Who is a mother? One who has children, like that. You understand? Who is the parent? One who has children. So who is a holding company? One who has subsidiary company is a holding company. So no definition. If it has subsidiary company, it is a holding company. What is subsidiary company? I will tell you. That will be defined fully, correctly. Holding company means that which is having subsidiary company is a holding company. Okay. Now, holding company can be a body corporate. It includes body corporate. Please understand, holding company includes body corporate. Means what? Holding company definition under the Companies Act, when the word holding company is used, it can be a foreign company also. Got it? Holding company could be a foreign company also. Be careful. Okay. So here is an example. Holding company HC is having 1, 2, 3 subsidiaries. So this is a holding company. What is subsidiary company? We will see that. Before that, we need to see certain definitions which are important. I will try. Please don't tell me what to do. I don't like people telling me what to do. I will teach in one way. That way you will like it. I'll be happy. Don't tell me what to do. Okay. Generally, as a teacher, I don't like students telling me what to do. Is that an agreement? Because I'll be teaching you for a long time. Another topics. If I do not cover at all, you tell me, sir, you have not covered, I will cover. But at this stage, don't say cover this, cover that. I will teach you. Don't worry. If I have not taught you, you tell me. Okay, this is small understanding. You are a good student, Aslam, but don't tell me what to do. Because coverage may not come like that. I may not cover it today. I have got certain topics allotted for the day. That will be covered by me. I can't cover that way. So if you tell associate company, another person tell this, that, then I will be like the father, son, and donkey. Whom I listen to? Yeah, everybody I have to listen. I can't do that. Voting right means the right of a member of a company to vote in any meeting of the company or by means of postal ballot. So voting right means the right of a member. The member can vote either by attending the meeting or by postal ballot. Whatever it is, that voting right. Later on, you will be coming to another important topic called management and administration. There, either me or some other faculty will teach you how this voting right will be exercised, whether by show of hands or on a poll or postal ballot. So, how it is exercised. But voting right is the right of a member to vote on any resolution in any meeting of the company by means of postal ballot. Okay. Total voting power. Okay, very important word. In relation to any matter means the total number of votes which may be cast in regard to that matter on a poll at a meeting of a company, if all the members thereof or their proxies having a right to vote on that matter are present at the meeting and cast their votes. Okay? So, imagine, if all the members attend and vote, what is the total number of votes which may be cast on that matter? The total number is called votes, but not by show of hands, but on a poll. Okay, please note, make a note of this somewhere in a paper or in your mind. A show of hands, one member, one vote. All those in favor, raise your hands. Show of hands, one member, one vote, physically. So, but once show of hands is not accepted, somebody wants a poll, then please note it. Remember, listen to me. On a poll, one share, one vote. Okay? If there is a differential voting rate, then proportionately. Suppose there is a share which has only half vote, then one share, half vote. But now, if it is a normal share, then one share, one vote. Got it? So what is the total voting? Suppose a company has 2 lakh shares, paid up capital is 2 lakh shares. Then what is the total voting power? If all the votes are exercised, means how many votes are there on a poll? 2 lakh. Now, one share, one vote. 2 lakh shares, 2 lakh votes. So the total voting power is 2 lakh shares. Why this total voting power is important? Because later on, they'll be keeping on giving you limits. Up to this limit, 5% of total voting power, 10% of total voting power. So at that time, you should know what is the total voting power. So simple is, you see what is the paid up capital number of shares. That is the total voting power. So straight. Postal ballot means voting by post or through electronic mode. Okay, simple, not difficult to understand. Now we come to definition of subsidiary, right? Let me see if I can complete it today because there are some topics to be covered. Let us see if I can. No problem, Aslam. Just give me time. I'll cover it. Don't worry. I'll cover it. Listed company amendment. Not able to understand your question, sir. Not able to understand. What do you mean by listed company amendment? Not able to understand. Associate company, I will not be able to cover today. I will cover it definitely. Share these notes for revision. I will share it only after 4th. Today is 4th, 5th, 6th. 6th, I will complete the topic and then I will share it. Till then, 7th, I won't share. Madam, you are not going to revise so much. You attend my class now. This itself is your first revision. Coolly read the Institute Ka material. Wait for my notes to come. Don't read it again. You go on with the flow of the topics. There is a first revision for you. Okay? Second revision, later on we'll do it. Don't worry. No problem. Somebody was asking a nice question. See, this is a very good question, yeah. I don't know the answer, Mr. Pranav Vasishta. LLP is a body corporate. Can it be a holding company? Seriously, I don't know the answer, ma. First time, this is the type of question that puts me in the difficulty because I'm unable to answer. See, these donkeys in the Ministry of Corporate Affairs have said, holding company include body corporate. They have forgotten that LLP is a body corporate. What they are trying to do is to include foreign company here. But your question is very correct. So for that, what I will do, since I'm only a chartered accountant, not a practicing company secretary, though I am a qualified company secretary, it's a good question you have asked. Very good question. Allow me to put it to some company secretary and see what they are saying. Okay? And then we will see. LLP is a body corporate. Can it be a holding company? If whatever answer I get, I will give you in the next class. Okay? I'm not able to give a proper answer for this. Because, see, if I say LLP is holding company, that will not be correct. Because LLP is not a company. LLP is not a company at all. Because to become a holding company, you have to be a company. You understand? Whereas LLP is not a company. It's only a body corporate. But here they foolishly said holding company includes body corporate. That is where the problem starts. See, these fellows, without thinking, they will simply, with something in mind, they will amend, not understanding that, certain words can have other meanings also. So, not able to really answer. If you ask me honestly, if you want my answer straight away, I will tell you, no, sir. Though the word body corporate is holding company includes body corporate, LLP cannot be a body corporate, sir. My answer, for what it is worth, okay, I may be right, wrong, but still, the ultimate authority on company law is company secretary, not me. I am only a chartered accountant qualified as a company secretary. The company secretary, practicing company secretary are there. They are the ultimate authority on company law. Let us see. I will ask them also and then I'll get back to you. Okay. Proxy and all, I will not explain now, Sunilji. When you come to management and administration, you will understand. Okay. In simple words, instead of attending in person, you send somebody as your representative. That fellow is called proxy. You don't attend, you send somebody, that is called proxy. Now that proxy can also vote, but he can only vote on a poll. He cannot show raising by show of hands, he cannot. Only on a poll. So that is proxy. Proxy is a person who attends the meeting on behalf of a member and votes at it. Okay. So the answer will be no. That's what I thought. Again, see, the New Companies Act, there are many issues. Now the time is 8:30. I don't think I can cover subsidiary company today. Don't worry. In the next class, we will cover balance portion. And I will look forward to more great interactions with all of you. And I would love to have more such questions. I'm very happy with the way today's class went. I hope you are also happy. Sometimes, I will be a little... I will talk emotionally. I will talk with the thing. Because if you don't show emotion, then you are not a human being. Yeah. What do you say? Talk. Express emotions. Okay. If you nothing wrong in that. So don't get worried about it. And I can't, because if I am practicing as a see, I am in full-time practice as a chartered accountant. If I am also practicing as a company secretary, I will not be in full-time practice as a chartered accountant. Correct. Similarly, if I practice as a company secretary and I am also practicing chartered accountant, I will be full-time in neither. So no opportunity will come to me. I have better opportunity in practicing as a chartered accountant. Therefore, I am not practicing both. But see, why I did CS, sir, at that time, spare capacity was there. I did it. I am a member there. I am a teacher there also. I teach company secretary institute. But then, company law today is a specialized subject. Only company secretary can understand the nuances of this law. They are the authority on this law. Like that. I am not. Okay. When will your next class? Day after tomorrow. Okay. 6th. Thank you, sir. Good night. Yes. Thank you very much. Wishing you all a great evening ahead. Or if you want to go to bed, go ahead. My notes will be shared with you on 7th morning. Okay. Inshallah. Thank you. Good night.